Bitcoin looks calm right now, but the options market is quietly screaming for a crash. Bitcoin looks calm right now. It looks stable. It has been bouncing around between 64 and 74,000 for a while. You look at the chart, and it just looks like a flat line. It feels like the market has found its floor. But that stability is a mirage. It is a trick of the light. A new report from Bitfinex says the derivatives market is quietly screaming for a crash. While the spot price is just sitting there, traders are paying a massive premium for protection. They are buying insurance against the drop. The data shows a huge gap between what people expect to happen and what is actually happening. Implied volatility is sitting high between 48 and 55%, but actual price movement is dead. That means everyone is scared. They are betting on a sharp move lower even though the price has not moved yet. Watch this part, because it is the dangerous bet. There's a specific setup happening right below $68,000. This is called a negative gamma environment. Here's how it works. Market makers have sold protection to traders. They are the ones taking the other side of the bet. If the price drops below 68,000, these market makers get into trouble. To stay safe, they are forced to sell Bitcoin as the price falls. They have to sell more to hedge their exposure. This creates a feedback loop. The price drops a little bit. The market maker sells to cover their losses. That selling pushes the price down further. Then they have to sell even more. It accelerates. It turns a slow decline into a free fall. The report says this could drag Bitcoin all the way down to $60,000. It is not just a drop, it is a structural collapse of support. Even the recent liquidations have not fixed this. Over $247 million in long positions got wiped out recently. You would think that would reset the market, right? But the report says no. The structure is still fragile. Demand is weak. Corporate treasuries, which used to be the main buyers, are slowing down. They are holding, not buying. And the miners, they are selling their own production. They are dumping coins to cover their costs. There is no one left to catch the falling knife. So why is the price still holding? It is the contrarian signals. People are looking for hope. They see Jeff Park leaving his role at ProCap, a Bitcoin treasury company, and they think the bad guys are leaving. They see Willy Woo, a famous analyst, saying Bitcoin might trade sideways for 8 to 12 years, and they think the bottom is here, and they are just waiting for the next bull run. They see miners selling and think they are dumping, so the price must be low. But that is the trap. The contrarian signals are real, but they are being used to keep people calm while the derivatives market sets the trap. The market is pricing in a major downside move. The stability is just the calm before the storm. The report says the market is exposed, it is fragile, and when the price breaks that 68,000 level, the selling will be automatic, it will be fast, and it will be brutal. So, is the bottom in? The contrarians say yes. The data says no. The derivatives market is betting on a crash. The market makers are ready to sell. The miners are dumping, the corporate buyers are waiting, and the price is just sitting there, looking stable, waiting for the trigger. The question is not if the bottom is in. The question is, how much lower can it go before the market makers are forced to sell everything? The report says 68,000 is the line. If it breaks, the free fall begins. And right now the market is quietly pricing that in. So be careful. The stability is a lie. The crash is coming. And when it does, it will be fast.